Hey everyone, me Kevin here. Quick update on some things that I did in the portfolio today. I want to talk about options. So obviously I bought a ton of options on 420, which was also the day that I eliminated my margin. I sold about $9 million worth of stocks and leveraged in with about $3 million worth of options, which options are a form of leverage. I didn't use margin because I used that difference of about that $6 million and totally eradicated all of the margin that I have. Now, those 3.5, 4, somewhere in there, between $3 and $4 million worth of options control the essential purchasing power of around $12 million of stocks. So I was really able to take my portfolio on 420 from a place of lots of stocks and not many options, but lots of margin, which margin sucks in a volatile environment. And I'm like, crap, I really don't want to be in a situation where I ever have a margin call because I'm worried that the market's going to keep being poopy doopy, but I don't want to be out of the market. So what I did is I switched over to options. Options go down more when the market goes down, which is not so great, but zero risk of a margin call because I've paid down my margin. So just to clarify that, as long as my theory is correct and our market rallies between September of 2021 and the summer of 2022, the options I bought should print more tendies, theta decay considered, should print more tendies than the $9 million worth of stocks that I had. So in other words, I got into the market more. I exposed myself to the market more on 420, but I did it in a way that puts my money where my mouth is and says, I'm going down, doubling down on my theory that this market, this pain we're feeling right now is temporary. And as soon as inflation starts inflecting down, which right now it's still going up, it's inflecting up. It's bad right now, okay? But once this fades, we start launching those rocket ships again. Now prices have come down a little bit more. In fact, right now, this was the worst day for the Dow since January 29th. And we just had some bad news for Bitcoin, which is leading companies like Marathon Digital and Riot Blockchain to be down 12 to 13% in the after hours. I imagine this is not going to be good for a company like Hut 8 Mining either once it actually opens. We don't see pre-market or after-market hour trading on the OTCs. But this is kind of bad news. Another little update between when I recorded this and when I was editing this, Mara and Riot are down even more in the pre-market. Marathon's down 18.6%, Riot is down 16.8%. The market or aftermarket hours have now closed, but they started falling because all of a sudden Bitcoin and Ethereum started having another sell-off. Bitcoin at the time of this recording at 50,000, Ethereum at 38.94, Dogecoin at 41. They hit lows that were lower than this. They've recovered, but now they're falling again. It's a mess in cryptos right now as well, and unfortunately, I hate to say it, but this kind of reiterates the concern that I have about the potential for this everything sell-off, where you get the indices selling off, following tech and consumer discretionaries, you get recovery selling off, and cryptos. And this Elon catalyst that we talked about in the live stream I did a little bit ago, not a good start. In fact, I should probably reach out to the CEO of Hut 8 Mining and go, yo, we should probably do a little bit of talking on what just happened if you're down. Well, I'll do that right after this video I post. But anyway, the market right now is such that I decided on a high volatility day like we had in the market today. CBOE volatility index shot up over 20%. We were around 27 at one point for volatility. Usually with volatility going up, we also see put options skyrocket in their pricing. But a lot of that can also be people jumping over to purposefully try to buy puts in the S&P 500 to hedge against a potential S&P 500 correction, which I do think is possible. But what did I actually do today to balance out my portfolio a little bit? Well, I added options, mostly because I don't have a lot of cash around, and this is risky. I've been buying stocks over the last 2 weeks. I've probably spent about $400,000 to $450,000 buying actual stocks, like shares. And so today I spent, what did we spend? Somewhere around, well, you know what? I'll just tell you what I spent. I'll give you an idea here. So I bought options in some of my favorites, and I balanced out my future PEs on this. We talk about that a lot in the course member live streams. I won't bore you here with how we balance out our future PEs and how we evaluate our fundamentals from 2024. If you join the course using that 39% off coupon code link down below, just go to Lecture 1.0 and go to our live stream today. So we have, I bought 4 calls of Tesla at $600. That was a cost of about $87,600. So definitely went in on Tesla here. That was when Tesla was right around $590 in its pricing. So I bought those slightly out of the money calls. So that puts me at 87,660. Then I got, obviously still bullish on Tesla. You can't FUD me out of Tesla. Maybe that's crazy, but oh well. It's my energy ETF. I bought 10 Enphase calls. Enphase is a freaking bargain. I got the $100 January calls for 2023. All of these are long options. That was about 46,050. Then I got, all right, let's see here. I'm looking at order confirmations here. I bought Lemonade. I bought the dip on Lemonade. I bought in the money $50 calls 2023 for 38,550. Then I got AMD calls at 70, also slightly in the money here. Only 25,800 on that. I want to add a little bit more to AMD to balance this out. We'll see what happens tomorrow. I also bought, I don't remember how much this was. Let me calculate this really quick. I bought Shift Technologies right before earnings, which was recently one of the few stocks that I actually bought before earnings because most companies have been missing. And yeah, this one maybe got a little bit lucky because it's slightly green in the after hours. It did run up about 10% in the after hours, but yeah, this was about $20,582 of Shift Technologies. This one's a long play for me, and I really love it. I think it's so undervalued in the market. Compare here, do this, okay? If you like fundamental analysis, do me a favor. Compare Shift Technologies to Vroom and Carvana, and when you look, you'll be like, how is this so cheap? Yeah. Enphase also got oh, where's my Etsy? Hold on, it's supposed to be Etsy. Oh, I think I put the picture. Whatever. I got another picture of buying 10 more Enphase calls at for January 23. I'm pretty sure those were supposed to be Etsy's, so I think I screwed that up because it looks like I bought Enphase twice. I was very confident that I had bought Etsy today. Apparently I didn't, but I meant to. Oh well. So I spent about $264,000 on stocks today, and yeah, buying the dip. It's tough. It's not easy. It's painful, and there's a lot of drama going on in the markets right now. Personally, I'm waiting for a dip in cryptos as well. We're getting a Bitcoin dip, but I really want to grab a dip on Ethereum. I'm looking for like Ethereum, and this is going to sound crazy, but like 1,500, 1,800, I'd love to plow in. But right now, there's so many deals in the actual market itself. I know it sounds maddening. I know I'm expecting the market to potentially continue to decline over the next few months, but I don't know exactly when that bottom is going to be, and I'm not sitting out on this market. I'm taking money that a lot of folks like to spend on hedging, and I'm adding into these dips because these are all long-run positions for me. The 2023 calls, I don't like going too heavy on options. I try to keep my options around 25% of my portfolio. This aligns with that, so my next buys will probably be shares again. The other about 400,000 in shares I've been buying, all of those alerts are, of course, in the Stocks and Psychology of Money group. Today was a pretty bloody day. We'll see how things evolve tomorrow. But keep in mind, we did just have the pipeline open up as well. So far, 10-year treasuries aren't really reacting. We'll see how things react tomorrow. But we do have the pipeline, the Colonial Pipeline, opening again as of approximately 5 p.m. Eastern on Wednesday. We're not at full service yet, so it's going to take a little bit of time to get back to full service. But this is good news. And the more good news, the better. That's really what this market needs right now. And remember, we're really investing up to that point where we start seeing that inflection point in inflation. So we get that inflection point in inflation. That's what I'm expecting to see rocket ships take off. And that's why I'm loading the boat with rocket ships right now. It's pretty hot and fiery right now, and it sucks. But I'm putting my money where my mouth is. Thank you so much for watching, folks. Really appreciate you, and we'll see you in the next one. Check out that coupon code link down below as well. We will make it expire very soon once the marketer is ready. So check that out down below. 39% off with the coupon code To The Moon, and you'll get access to in stocks of psychology of money, any of the trades that I do, but also lifetime access to all of the lectures, the new lectures that I add, and for the foreseeable future, the private live streams. The private live streams won't last forever, but for the foreseeable future. Thanks so much for being here. We'll see you later. Bye.